All right, traders, welcome to another week of trading and welcome to another technical analysis video. This is the Learn to Trade channel. But before I go any further, if you enjoy what you see, please subscribe to this channel, give us a like so we can reach other traders. And if what you're about to see, this analysis makes sense to you, if you want to get the signals that I will be sending from this analysis, there's a link below this video where you can subscribe. It's only £50 per month, so it's achievable for every single one of you, right? Um, I wish you all the best, and if you join us, well, welcome. Now let's get on to this video. And we are going to start with the major currency pairs and gold, right? Now let's see what we have here. Now gold clearly is giving us a headache. It opened and it's now it has dipped about 1.34%. I was not in front of my chart, so I did miss this one out. And it has completely and utterly broken with that, um, well, with the bullish structure. So what to expect from gold, right? We are not going to be buying into this at any time soon. This was I mean, you saw me, right? Deleting this gold long uh, that we had here. I'm going to show you the actual level that we had here, right? So we had the breakout of that triangle that never happened. I had my buy stops all the way up here. We did not get filled on that long. That's why I personally use pending orders, right? That's the main reason I do use pending orders. Now let's go to the 2-hour chart. Let's have a look at what's going on here. What are some key levels that we can actually work with, and what to expect for next week. Now the US dollar. Now, to be completely honest, this crash in gold is just a big buying opportunity for me, right? Why? Because Joe Biden is going to be the president of the United States. Democrats have control over the Senate and the House of Representatives, which means that more social focused bills are going to be put in place. A lot of QE. The dollar is just going to devaluate like crazy. So metals are going to jump on this blue wave. So I'm looking for opportunities to buy gold. That's what I am looking for, right? So let me just delete this and that. The big levels, we are going to keep them, but because I am using my template of 2021, just going to be doing that. Right, so what we have here is a completely meltdown. But just so we can actually, I'm going to compare it with the DXY, right? Um, Style, that's fine. Default, main tick, that's right. Cool. So the DXY, look at this. I mean, we had a big uptick on the DXY when gold melted, right? DXY, the US dollar currency index. So let's see if we have hit some targets to the downside. Now, this is about the 261.8 retracement of the first leg down, right? So this is the 261.8. This is the first key that we might, and remember, I'm not looking for a bottom. I will not be looking to buy this at any time soon. I'm looking for where buyers might be placed. And actually, what we can do is let me just open up another or the watch list right here, and let's see some volumes, right here. Let's go ahead and let's see some volumes. This gold spot, actually, yeah, let's use some volumes here on this chart. I don't know if I can use volume on spot, so that's why I opened the other template, so I can put on here the gold futures. But if I can use I can see some volume here, that'll be just fine. And yeah, as I thought, no volume in spot, so we are going to be adding here gold futures, GC. Remember that uh, XAU US dollar is a derivative of gold futures, so yep. I mean, it's the same thing, right? So we are, what I want to see is if on the higher time frames we are hitting some high volume zones, right? You know that I love using volume um, right here. Let's see the volume on all of this. So the high volume zone on the entire move to the upside was right here, and it got broken with. This is the zone that I personally was looking to buy gold into that dip. I did get on a buy that I lost a little bit of money on, but that's nothing big because I was buying into such a strong down move that I went with 1/4 of my normal risk after having made about 6% on this move to the downside. Now let's move. Let's go ahead and let's have a look at the bigger picture. And because, or even the bigger picture, yeah, I mean, this was the reason that I actually went short on gold at this level. I mean, you can see that this was the big zone. There's absolutely no level, no volume being traded at this area. So, where should we be looking for some support, right? Let's look at the volume just on the downside of that move. Right, so we do have what seems to be some exciting volume zones. Again, we just got broken with, and the high volume zones just continue to get broken with. So we are going to look at key levels. So the first key level that I'm looking at is the 1820 to 1815, right? This level right here at the 261.8. Completely understandable that we could bounce from it. So this is a big level that we're talking about. In my opinion, we haven't hit quite the zone where buyers should be placing themselves into. And because of the open, let's just have a look at how gold opened. Um, right here, we have the 50-minute chart in gold futures. Yeah, you can see that we opened and we are down in gold futures about 1%. uh, or let's see, about 354 ticks. That's a big push to the downside. This market is still very, very bearish. So on the higher time frames, this is where I see some possibilities of buyers jumping in, right? I'm not going to buy into that. Of course not. The way to get into a buy is after confirmation that we have reversed, right? I'm not going to be buying into this. Now, if sellers keep control of this market, where should we be selling into? Right here. This is the level that I will be selling into. And I am going to put on a alert here. And if you want that alert to be yours too, the link is below this video. I already told you what to do. Come on, mate. You have to start making better trading decisions. So key level retest. Shorts might be in play right here. So, yeah, I'm going to keep to myself the reasons that I would short this level, the reason that I wouldn't, but this is the level that you should, this is the true level that you should be looking into right here. Now, if this level, I mean, if price continues to rally, right, without a real retest of this level, I will be shorting into this, into some strength to that level. But if we get a real retest rejection of this level, then I will not short this level, but rather I would be looking to buy into the first sign of weakness to continue with the upside of this moving gold, right? These are the two scenarios that I'm planning on for gold. Cool. So, I mean, um, if you want to get access to my full on yeah, trade ideas, the link is below this video. There's, I mean, there's to me, there's absolutely nothing to think about. um, it's very cheap. It's very inexpensive, and the reason it's very inexpensive is because we want everybody to jump in with us, right? Everybody should and could be profiting from these moves. Pound dollar, the pound USD. Um, this short trade that I had on the pound, I closed at this level. I didn't want to. The reason that I closed it right here is because of price action itself. This was very choppy. It was not a clean move, right? So this started to look more like a bullish flag than a um, reversal. But I mean the setup was the same as gold, um, which was pretty interesting, right? So let's just delete all of this level. Let's just keep the big levels, the one to the upside. That's it. And let's see if we can find some structure in this market, right? So we do have something uh, that looks like a flag, and if it looks like a flag and smells like a flag, it might be a flag right here. But the thing about this formation, guys, is that this is the thing that I do not like, and this breakout to the downside, right? Remember, I am bearish the pound yen. This is a pound US dollar. This is a pound driven market for the time being, right? I mean, this move to the downside might be US dollar driven, right? Because we saw that uptick on the DXY. Let's go ahead and let's have a look at the DXY itself right here. Damn. So the DXY opened very bullish. Yeah, that this is bringing major currency pairs down, gold down, etc. So we can attribute this move to the downside to the US dollar, right? But the thing is that I do not see anything here that I really like, right? The risk to reward ratio on a breakout of this, I'm sorry, of this triangle just sucks. To be completely and utterly blunt with you, right here sucks because we have this big level of resistance right here. For me to actually, and let's delete that because this actually if we're looking at structures, this structure, I mean, this is the true structure that I will be looking to. This flag right here. I mean, we started to. Now we are no, and this is the other thing. We are no longer printing divergence with my oscillator. No, you cannot have my oscillator features. Yeah. So I mean, I get asked all the time, so might as well respond on the video, right? So the thing about this is, I would like a retest of the 135, 134.45 level, right here about these lows. But there's absolutely nothing that interests me in the pound US dollar. The Kiwi USD now, the Kiwi USD, this is another story, pretty interesting too. But the thing about this is, again, if you're new to the channel, you don't know this, but I'm gonna show you the big level on the Kiwi USD. The Kiwi USD big level is this one right here. Big support zone that was broken with and just retested right here. But we have broken with that key level to the upside. The Kiwi is super strong and has been super strong against the US dollar since March. Which it has been it has appreciated 33.43% or 1800 pips since the March lows. That's a big move to the upside on the Kiwi. I know a lot of sellers got trapped right here. Um, yeah, because they did not wait for that breakout. I was not one of them. But let's see if we can find some upside opportunities here on the Kiwi. Now, this is the level that I will be looking to buy into. Again, let's just delete the level that we just um, painted right there on the daily chart, just to keep the charts clean, people. So this is the key level that I will be looking to buy into on the Kiwi USD. All right. So I'm hating this green. I know, I mean, if you've been with me for a while, you know that when I don't like a color, I just change it because, yeah, I have OCD and I'm that OCD. So I'll use this one right here. And I'll keep this one on the yellow. Yes, I do like that yellow. Right. So the Kiwi USD still has some downside in my eyes, right? We're still very much inside of a what seems to be a flag, and The actual level that I will be looking to buy into is this one right here. Again, you want to get some of my trade ideas, join the VIPs with the link below this video. So it's that easy. So buys my bid play right here. So that's the only level that I would be looking to buy into the some Kiwi weakness against the USD. Just because this was the big level that we were looking on the daily that was got broken with retested once, and we might retest it twice for another high, right? Um, pretty straightforward. Do not short or do not go long this blindly. Again, if you don't have a given system or that gives you entries, just don't follow what I'm saying blindly, right? I'm just giving you some of my trade levels. These levels, I might actually I might actually not take the any of the trades here if I don't get confirmation, right? If you want the actual trade ideas, join us with the link below this video. But this is my level on the Kiwi USD. About the 71.80 to 71.60 would be my buy zone on the Kiwi USD. Let's have a look at the Euro US dollar. There's a lot of lines here, so why don't we just remove all the drawings? That's right. This is the 1 hour chart, too choppy for me. I mean, if you know me, I hate trading the Euro US dollar. Just way too choppy, super slow. And the reason it's this choppy and this slow is because, these are two super strong currencies trading against each other. So that makes for a lot of competition between them, right? And that's the only reason that the Euro US dollar is such a slow market. But again, it can move. I mean, if you're patient enough, you can make some money out of that one. So if you look at this, we have broken with a crazy structure, and yeah, the DXY open extremely bullish, right? Yeah, the DXY just broke with the current bearish structure to the upside. We are not bullish. We're not going to look into US dollar buys at all. We are going to look to actually sell the US dollar higher. That's the only play that I see on the USD. I'm not going to buy into any buy into any weakness, but sell at key levels. And the next key level that I see is around the 90.70 level. So if the DXY continues to rally throughout the APAC session, probably we'll be selling this on the London Open again with the relative um, markets, right? Or because we don't trade the DXY per se. When the DXY achieves these key levels, we choose a financial product to trade the US dollar. Right, so the Euro US dollar right here is testing this key level, right? Really strong key level on the 4 hour chart right here. Between the 121.80 to 121.55. Yeah, now let's do it a little bigger. 121.80 to 121.40. This would be a very strong level on the Euro US dollar. Looks about, there's nothing interesting at this moment on the Euro USD on the 4 hour chart. If we go to the hourly, it's just too choppy. There's nothing at all here on the Euro US dollar for me at least. The US dollar Canadian dollar, pretty. This is something that I do like to trade. But right now, this is a 50-minute chart. Let's go higher to the hourly. All right, so the hourly is telling me that we are in a range, right? And a pretty obvious range that we're trading in. So what to do here on the US dollar CAD, right? The US dollar CAD has been very bearish because of the US dollar weakness and some CAD weakness too, right? This drives the US dollar Canadian dollar lower. No, I'm sorry, some CAD strength. right? And what I would be looking to, because this is a pretty range, right? This is a pretty range. I mean, if you get the opportunity to get 130 pips out of a range, why wouldn't you trade it? So the key level that I will be looking to sell some USD against the Canadian dollar is this one right here. Range play at highs, right? I'm giving you my playbook, right? I mean, but if you want to get the exact levels, trade ideas, etc., you know what to do. The link is below this video. But the thing is that, yeah, I do like this level, right? I mean, this is a big level. Just check this out. Yep, yep. Big level on the US dollar, Canadian dollar approaching. Um, we are going to bazooka this level when we get that rejection candle. Remember, don't sell into this blindly. We will need that rejection candle to drive us lower. And of course, the validation. Um, but if you don't want to join us and you want to trade this by yourself, more power to you. But the thing about this is that I do like it, and it will yield a great risk to reward scenario on a short. Now, if we get now, and this is what's interesting about range plays, right? And this is why you do not play them blindly, right? Do not do that. Go to the 3 hour chart so you get a cleaner chart, and right about here. Now, if price actually breaks with this level, we are going to buy that retest of the level, right? So there's two plays here, and that is just if the US dollar continues to rally above that 90 70 level, or if it bounces from that 90 70 level. You have to keep an eye on that one, right? Let's see if we get some sort of um, structure in this market. Right here. All right, so this is not the most pretty structure that I've seen, but it is a structure nonetheless. We have broken with this immediate bearish structure, right? Well, we're not going to draw the overall structure in the market because we're just looking at levels, and this can go either way, but this is the level to watch, so heads up to that one. All right, this one could yield, and this is my preferred one of every single chart that we have seen so far, just because of the risk to reward ratio that we could get on this one, which could actually be a great one to make some killings, right, in the market, not literally. All right, so having said that, I mean, yeah, all right, let's finish up with the US dollar yen. Yeah, just let me connect my headpiece because I'm running low in battery, and I will do two more charts, right? I will do the US dollar yen and the Aussie USD. Cool? That is cool. Is that cool with you? Yeah, just let me plug this in. All right. And I need to plug this into my headset. Hold on. All right. So now that we are plugged in, the US dollar, yeah, that looked like a megaphone, right? I don't trade megaphone patterns. It's not my thing. But I mean, the pound yen, the US dollar yen. This is the level that we were looking on the US dollar yen, right? A lot of players just got caught in this. I mean, if you were shorting the US dollar versus the Japanese yen on the Friday afternoon and you left that trade open, well, this is completely your doing, mate. Uh, there's nothing I can say about that more than it is your doing. Now, this is something that I find very interesting, right? I will not be looking to buy into this, but just check this out. Now let's go to a 2 hour chart because, right, I can't zoom this enough. Look at this. So this is what I'm looking at. I'm looking at this structure in the US dollar Japanese yen that, I mean, a pretty structure that it probably will explode to the upside at some point in time, right? But right now, because of the US dollar weakness, we are bullish the Japanese yen, right? Um, Safe haven for US dollar holders, just as gold That's why the USD yen is just trading down, right? And this is the inflection point in the market that I like, that I wanted to show you. Now that we have broken with these highs, price is going to keep on trading up. And when we hit this point in time, an inflection point in the market, this is the level that I will be looking to short the US dollar. Japanese yen, right here. USD, no, what? Big inflection point, point in the market, right? And I will be looking for short opportunities. But if the USD yen breaks with this inflection point in the market, well, this is going to be the big buy of the century, in my opinion, right? So let's have a look at some targets to the upside if we have hit them, or if we would hit them, if we hit that level. Sure, would be the 161.8 around that. Yep, around the 161.8 of that move to the upside. Remember that this is the level that I'm looking at, or that inflection point, and price can actually just start to trade up and do a fake out and hit those levels where big buyers are, which big sellers are going to be jumping in, or it can just go like this. Remember that we do not predict, we react to what the possibilities are going to be, and in this case, we have both possibilities. We might hold, price might hold this level, or might break with this level, and we are prepared for both of them. Should you want to be prepared for both of them too, click the link below this video. Right, so having said that, that's the 161.8. Let's see if we get the 261.8 too from the first wave up. If we get the 261.8, that would be a crazy level. Well, the 261.8 is a little bit on the upside, so we're not going to be using it. But again, there's nothing to do here on the US dollar Japanese yen other than wait for that inflection point in the market, right? And I'm going to end up this session or this weekly market breakdown with an Aussie USD again. The Aussie USD, like the Kiwi, has been strong and has been from the lows. This is a super huge rally. I mean, I wish I would have held it. This is a 41 move to the upside or 2,300 pips, right? Now, there is another key level or big level that has been broken with, I think. Let's see. Let's actually see. This level is long gone, actually, because we broke with it, and here is the retest candle, and now we're moving to the upside. So the next level that just got broken with it is this one right here. Now around the 7660 to 77 is this big level that we broke with last week, right? I reckon. Yeah, last week. So what are we going to do? There's nothing to do other than wait for the retest of this key level. Remember, levels are zones. They're not actual there are no actual lines on your chart. It's a big zone. Well, this is a little zone, but this is nonetheless the zone that I will be looking to buy into. This some weakness in the Aussie versus the US dollar. Right? So there you go. These are my levels for next week. I hope you take some advantage out of what you just saw. I really wish you could join us on with the VIPs because we do trade together, and we like to trade together and make money together. Right? So thank you for joining me. And if you join us with the link below this video, well, I'll see you guys on the inside. If not, I wish you a great training week. All right? Cheers.